Welcome everyone to this panel entitled Driving Sustainability Through FinTech, where we will focus the discussion on new digital ESG data. These are really essentially machine-generated data that can support financial decision-making by offering to accelerate the shift from the current data regime, which is heavily reliant on company self-reported data, into a regime which is relying on multiple data sources. These can be, for instance, offering real-time impact data on deforestation at asset level through satellite imagery analyzed by AI, or it can be to offer carbon emission data from real estate portfolios where you have IoT harvesting electricity consumption analyzed into a carbon footprint, or you can analyze that together with thermal data map from space. But these are all basically, a lot of them are potentials, and we don't only want to talk about potentials today. We want to be very concrete because we want to be as helpful as possible. We want to start to demystify the buzz around what is artificial intelligence and how is it being leveraged concretely today to generate new ESG digital metrics that are aligned to TCFD, that can help you also report on the upcoming TNFD, Task Force for Nature-Related Financial Disclosures, and other leading frameworks and standards. We also want to give you a glimpse into the future, where this technology is driving us tomorrow. And to take us on that journey and on that conversation, we have 4 experts with us today. And they are going first to give each a 5-minute keynote where they will reflect upon what are today these new digital ESG data sets, what technologies are they leveraging, and how are they informing today financial decision making that is aligned with sustainability standards. After each one has given a 5-minute keynote speech, we will go into a facilitated conversation where you will also be able to pose questions. So I have the pleasure to introduce to you the first speaker. It is Alexandra Mishaleshu, who is the Executive Vice President for Sales and Marketing at RepRisk. She holds a master's degree in business administration. She joined the company in 2013, and she has really been establishing and building out the globally distributed client relationship management, sales, marketing, and communications team. Before that, Alexandra has held a number of positions. One of them has been to be part of the Global Sustainability Affairs team at Credit Suisse, focusing on environmental and social risk management. I'm happy to pass the word to you, Alexandra.
Thank you, Marianne, and hello, everyone. I'm just going to share my slides. Great. Let me know if you don't see them. So yes, thank you very much. What we're talking about today is really exciting because RepRisk and all of us sitting on this panel here are really at the intersection of 3 major trends shaping the financial industry. One is the mainstreaming of ESG. The second is the plethora, the growth, exponential growth in big data. And the third is the major advances made in AI and machine learning, which helps to leverage that big data and transform it into structured, relevant information. So let me start by sharing a bit about who we are and what we do here at RepRisk. We are a pioneer in ESG data science. We actually got started back in 1998. We were born out of credit risk management, and we were first a consultancy focused on the financial sector. Our key product, the RepRisk platform, was born in 2006 as a due diligence tool for banks and asset managers. It was really created to help our clients systematically identify, assess, and monitor ESG risks in their business. That data set, that platform is today the largest of its kind, and we serve close to 400 clients around the world. So this slide tells you the sort of key points you have to know about our approach to ESG. So the first thing is, as our name suggests, is we look at ESG through a risk lens. So everything we do is through a risk lens. The second key point is we look at a company from an outside-in perspective. That essentially means that we look at what the world says about a company, not what the company itself is saying about itself in its reporting and self-disclosures. So in essence, we're not looking to tell our clients, does a company have a human rights policy? What we're trying to instead is tell our clients how, in fact, does a company manage human rights issues or any other ESG issues around the world where they operate. So we're helping our clients basically get a reality check and see whether companies are walking their talk. The work that we do is powered by technology. AI and machine learning is a key element to what we do. And we marry that together with human intelligence. So the AI and the machine learning really helps us to leverage big data. It helps us to deliver the size and scale of our data set and also address the speed at which we need to deliver the data to our clients. But we also believe in the power of human intelligence and the role that it plays to curate and analyze the data to make sure that it's relevant for the users. So the combination of the two is really key in our view for delivering actionable information that cuts through all the noise, but also delivers the coverage and the timeliness that clients expect and need. And that's really where the technology plays a very important element. The last few points about what we do, our data is updated every single day, again, powered by the technology part of what we do. And we have a consistent, transparent methodology that we use to assess companies on ESG risks. And our data set goes back to 2007. So let me share a little bit more about how we put all these pieces together. There's a lot happening here on the slide with all the figures, but I'll walk you through the key points. This slide shows the research inputs, and then it shows what the outputs of the entire process is. So regarding the research inputs, so we start off with a data set that's close to 14 years long, and it includes millions of documents that have been annotated, so human labeled, according to ESG risks. So it's a very unique data set that really helps us leverage the best of machine learning to improve the algorithms constantly to be more accurate and efficient. Through the AI the systems that we have in place, we're able then to scan all the big data out there. We're scanning over 500,000 pieces of news and documents and sources every single day. And these 500,000 documents are coming from over 100,000 different public sources and stakeholders. So we're looking at news websites, NGOs, regulators, think tanks, and a variety of other different public information. And those sources are not just in English, they're in 20 major business languages. And that part of the work that we do is key because it helps us to really capture risks as early as possible at the local level. So all of these go into our research input, and the output of this entire process, which happens every single day, we have the daily updates, is the data set and the database that we have. So it's the largest of its kind on ESG risks. It has today over 150,000 listed and non-listed companies from around the world. So covering every market, including emerging and frontier markets. We also have profiles on sectors, on countries, on infrastructure projects, and we have 95 ESG factors that we cover in our scope. And because frameworks are so important today when you talk about ESG, we map our data set to some of the key sustainability frameworks available. So to the UN Global Compact, to SASB, and to the Sustainable Development Goals. We're also investigating how we can do a mapping as well to the TCFD and to the EU taxonomy. So this is how it all comes together. But let me briefly share how it actually is used in practice. So rep risk in banking. We work with over 60 banks from around the world. And banks use our data on a day-to-day basis to integrate ESG risks into their due diligence processes. So they may use it in their day-to-day transaction reviews, whether they're looking at a business transaction coming from trade finance or coming from advisory or IPO, whatever it may be. It can go through an ESG risk assessment using the RepRisk data. They also use it for client onboarding and for know your client processes. So basically, if UBS is looking to add a new client, that new client goes through all sorts of checks. But for environmental and social risks specifically, that's that's where they use RepRisk data. So that's the banking sector and application. And then if you're talking about investment management, what you'll notice is that this slide looks very, very similar. And that's essentially because regardless of our client, our use case is very similar across our client base, whether those are financial institutions or non-financial institutions. Essentially, our clients are using our data to systematically identify and assess the ESG risks in their business. So if you're an investment manager, they're using RepRisk to integrate ESG across asset classes. And because of our data set and our coverage, that means not just equities, but also the ability to integrate ESG into fixed income, into private equity and private debt, and into infrastructure investments. And I'm very happy today to be on the panel with one of our clients, Xavier, who will speak after me. HSBC, I'm very happy to share, is a client of RepRisk both on the lending side of their business, and they also use it on the asset management side. Great, so hopefully that gives you a bit of an introduction to what we do and how we leverage technology for that to sort of finish off the presentation about what's next in the ESG digital data landscape. So there's a lot happening in ESG data in general. We can talk about standardization, we can talk about a regulation, but what I'd like to talk about to finish off is innovation. And innovation specifically related to all the additional data sets that can be used in ESG and that leverages technology. And one area that we've been focusing on a lot since 2019 is geospatial ESG risk data. What we did is we started off by mapping all the infrastructure projects in our data set to their respective GPS locations. And what we do then is overlay information about environmentally sensitive areas and socially sensitive areas. So for example, we can see if a particular mine is located at or near a UNESCO World Heritage Site or a protected area, other protected area. And then because we have data not only at the project level, but at the company level, we can then say and link that particular mine to the company that owns or operates it. So it's a very exciting project that we've worked on since last year, and we've mapped all of the mining and oil and gas projects in our database already, and we plan to have a first rollout to clients next year. So I probably went over my 5 minutes, Marianne, so let me end it there. Thank you very much, everyone.
Thank you so much, Alexandra, both for enlightening us on what the ESG data supply side from your end looks like today, but also where you're moving in terms of more asset level impact-oriented data. You already mentioned Xavier Desmedrul, who is the global head of ESG research at HSBC, and he has been that since 2007. He also acts as PRI coordinator since 2008. Before that, he has held various banking and asset management positions within companies like CDC, Crédit Agricole, and Banque Paribas, where he started his career in 1989. He holds a master's degree and in corporate finance, and he's also certified European financial analyst since 2005. I'm happy to give the word to you now, Xavier.
Thank you very much, Marianne. I hope you can hear me correctly.
Yes.
Okay, thanks. And thank you for welcoming me on this panel. And it's quite an emotional moment for me because I'm feeling like being back home because I've been deeply involved with the UNEP for quite a while. I've even been the co-chair of the asset management working group between 2006 and 2009, so it feels good to be back home. Now, regarding the use of ESG data, it's fair to say that, as mentioned by Marianne, by Alexandra, sorry, we have gone for ESG integration and we apply this globally across the board to all strategy. And you need to know that we manage, roughly speaking, between 500 and 550 US dollar globally under, this is what we've got under management. And this spreads across the 5 continents and also all asset classes. And this is quite challenging, I must admit, because HSBC, as everybody knows, means Hong Kong Shanghai Banking Corporation, which means that we have to deal with some parts of the world we are facing some data scarcity. And this is why we'll need the help of people like Alexandra, and not to mention the help of another guy I know quite well on this panel, Jason, basically, because as we need to get an access to data in China, sometimes it can be challenging, and this for many reasons. Simply because transparency can be, let's say, ailing for smaller companies, but also we need to deal with local languages. And it's fair to say that many of the traditional ESG research providers are very, let's say, good at working with English and some other European or Western languages, but they are sometimes failing to do the same thing when it comes to dealing with Mandarin or Cantonese. And for us, it's absolutely critical, and this is why certainly AI can help. And why is it challenging as well to get what we need in terms of ESG research from the traditional third parties? It's simply because those guys are working essentially with an information which is reported by companies. And it's fair to say that there is a huge bias towards larger companies, and not to mention when you are dealing, for instance, with high-yield issuers, there's a true scarcity of information. Still, we have to implement those kind of ESG concerns in the management of our funds, and therefore we need to find tweaks and other ways to deal with that. And of course, here AI can help, because the idea is more or less the following. You define a kind of metrics, you apply some machine learning, and then you will be able to retrieve the kind of information that suits your needs and fits with the kind of framework you will have defining previously. And as you rightly mentioned also in your introduction, I think we're also facing a kind of frenzy in terms of legislation. And last but not least, we have to deal with biodiversity. It's absolutely critical to deal with that, but the issue is, how on earth are we going to deal with biodiversity? And this is something I will explain later on, because as this is something new, guess what? Nobody is reporting it. And therefore, we need also to find other ways to gather valuable information in order to be able to implement this into the investment decisions. And last but not least, why do we include that into investment decision? Because this makes sense, and because this is also good common sense. If we aim at delivering better risk-adjusted performances over the long run, honestly, to me, that's a no-brainer. You have to integrate ESG, and this is why we have this, let's say, kind of bold statement, which is about applying ESG across all strategies, because when you talk about better risk-adjusted returns over the long run, this can basically apply to all asset classes, and this appeals also to all clients. Some clients can be reluctant and say, oh, I want the yields. Yes, fair enough, but if you want the yield, and if you destroy value at the same time, your yield wouldn't be actually that great. And this is why it's really important to clearly enhance our ability to gather and retrieve the right information we need. They are not always in the company reports. They can be elsewhere. They can be in the social media as well. And this is why we clearly need to onboard new technologies such as AI.
Thank you so much, Xavier, both for highlighting some of the challenges, but also for clearly translating that even biodiversity metrics makes financial sense and will increasingly make financial sense. And also for highlighting China as a new and increasingly opening up market for asset managers and asset owners. And I'm very delighted to introduce to you someone who can enlighten us much more about what are the types of digital ESG data that we can get on assets in China today. And that is Mr. Jason Tu, who is the co-founder and CEO of MioTech, which is an artificial intelligence platform that empowers sustainability and green finance. Jason graduated from Stanford University, and his career has spanned a number of larger and smaller tech startups. And he has also been at Standard Chartered Bank in Hong Kong. He founded MioTech in 2016. I'm happy to welcome you to the conversation, Jason.
Thanks, Marianne, for inviting me, and thanks a lot for for inviting me to this panel. And I think Alexandra and Xavier have really illustrated the ESG space from the technology and the finance perspective. So I'll probably just chip in from a very high level kind of philosophical kind of a point of view. Let me just share my screen if it would allow me to. There you go. Can you see my screen?
Yes.
Okay. I think everyone is familiar, for the audience of this panel, everyone should be pretty familiar with this person, Greta Thunberg. And there's an equivalent person, she has like 4.1 million followers on Facebook and 2.9 million likes on Twitter. And there's an equivalent person here in China who has more than 77 million followers, all combined from various social platforms. And TikTok, on TikTok there's 3.99 billion topic views on my green life. So what I'm trying to say is that I think we're really in a once in a century great paradigm shift. A lot of financial institutions or great investors talk about paradigm shifts. And how is the world shifting? I think, if speaking from a Gen Z's perspective, the younger generation's social value is changing. Right now, a lot of my younger, friends, I see them, being reluctant to use a plastic bottle to drink water. And eventually, when they grow up, they're going to drive the social value. And in return, social value is going to drive the financial value. That's how we at MioTech perceive ESG. It's really a new financial valuation framework. And going on down to valuation, when we talk about value, it could be driven by passion, it could be driven by personal characteristics. But when we talk about valuation in finance terms, it has to be driven by data. But unfortunately, right now, most prevalent kind of valuation methods are based on traditional financial valuation, which is based on financial statements. But as we all know, financial value equals to shareholder value plus social value. Then the problem is that how do you measure social value? And that's how we perceive the value of ESG is. It helps you to value the ever-growing, the growing larger and larger part of the financial value, which is social value. Traditional data sets, focus on financial reports. And as Alexandra already pointed out, we focus more on alternative data. That alternative data can come from various sources. Our data taxonomy tells us that data, information, knowledge, and intelligence are different. From the data level, we can collect data from documents, websites, databases, and even satellite imagery. And but it's not information. You have to make sense of it. And starting from there, we deploy our natural language processing algorithms to identify the entities, to identify the topics, for example, and then making sense of one piece of data does not equal to a piece of knowledge because the real world is interconnected. Jason is a friend to Marianne, Marianne is a friend to Xavier, and Xavier is a friend to Alexandra. So Jason might be connected to Alexandra. Right. So making sense of all the data and try to figure out its connectedness. Trying to figure out the connectedness of the data actually brings up what we call a knowledge base. That helps you to, for example, verify an additional piece of information. And lastly, presenting it in an intelligent way. So keep it short, but just to share with you a few examples, we focus really a lot on NLP, on knowledge graph, on our internal data governance platform. A few examples, for example, Goldman has published a report using our data to take a different lens. They call it ESG proxies in alternative data to verify how China has progressed in the past 9 years. The University of Hong Kong has used our data and our employee satisfaction data to test it against stock price. Then they have proved that the companies with higher employee satisfaction are more shock resistant during COVID-19. And lastly, for satellite imagery, a lot of the panelists have already talked about. We've done various assessments on coronavirus impacts in China, and we have also done flood damage in China. Taking a view from the above using satellite imagery. Lastly, I just want to say that China is different. ESG has its China challenges, and in a broader sense, it also has its Asia challenges. For example, state ownership, anti-corruption, poverty elimination. These are the data points or the key measures that we won't be looking at in, say, Europe or in North America. But these are really important data points in this part of the geography. So in our mind, the methodologists need to think about different geographies really in different ways. For example, employment discrimination. It's really hard to get employment discrimination data in China, whereas in Europe or in North America, employment discrimination is a very big thing. So I think China is working out its own ESG standards, and that standard needs to be supported by ESG data. So that's why I'm giving this talk. I think there needs to be an ESG ecosystem, and we have built the data foundation. So we aspire to collaborate with the industry to set standards. We want to empower regulations to roll out different policies. And lastly, I just want to say that world peace is in your hands. So we got to focus on ESG.
Thank you, Jason. It is truly exciting to see how the ESG data space is going to materialize and form also with new regulation in China on disclosure. So this was extremely informative. I have the pleasure to now pass the word to Daphne Lilly, who is the head of social politics at Banco Marais. And you're a bit of a different voice in the panel because you are not on the ESG data buy side nor on the sell side, but your banking infrastructure is built on distributed ledger technology. So you capture other types of data through your transaction data, social impact data as well. So we're very excited to give the word to you for a short introduction, Daphne.
Thank you, Marianne. And first of all, good morning. And can you hear me well, first of all?
Yeah.
Yeah? Okay.
Go ahead.
So first of all, it's an honor to be representing Banco Marais and discuss ESG data among such knowledgeable people. I am a representative of Banco Marais and I work with social responsibility. And what is Banco Marais? Banco Marais is a social fintech from Brazil in which we use AI and blockchain technology to implement financial services to the unbanked population in Brazil. So the bank's operation started in 2016 when Alexandra, the CEO, went to one of the communities of Brazil called Maré, and he noticed a huge need for simple banking services, such as paying bills. So until this time, the population of this community had to take a transportation 1.5 hours far to get access to such simple services. And this is the reality of 200,000 people in Maré and 45 million people in Brazil. And when we think about it in the big picture, it's also same thing with countries in Latin America and in the world. So 1.7 billion people in the world don't have a bank account. So because of that, Banco Marais creates solutions to actually solve social problems. And one of our main products is called Palafita, which is a cryptocurrency that we give the user security, and also we can leverage local economy. And only by its name, Palafita, we created this name with the community. So Since this time, we created from the beginning the name until the product with the community because we want to solve their problems. And instead of creating microcredit and a microloan score, we decided to create a micro vulnerability score because with AI technology, we can deeply understand the consumer, its behavior, and how we can deeply understand them. And when we think about the social aspects of ESG, we can also reflect in other aspects of such data. So in Brazil, in one hand, we have big corporations listed in the stock market that already has metrics related to ESG. They have a lot of technologies implemented in their management, but we don't see a consensus and a full understanding and a mensuration related to ESG specifically in Brazil. So all information related to that are self-reported. And when we think about the future of ESG data, we believe in the power of financial institutions like Banco Maré to actually make a change in this scenario by implementing SDGs, ESGs, not only as a checklist of checkpoints to follow, but also in the purpose of the company. And we believe that more than data, we want to include people and other sectors of society so there can be a change from the base of the pyramid until the rest of the society. And because of that, we say in Banco Maré that we want to democratize the access of ESG, not only in São Paulo, so in the big cities, but also in small communities like Maré, so they can also participate in such model. And we want to make visible the invisible.
Thank you, Daphne. Thank you all for really enlightening conversations around where the market is, where you see it going, and where the gaps in your needs. So we have a bit more than 15 minutes left for conversation. And we already have one question that's come in. But before that, I want to go back to you, Jason, to sort of really cut to the chase and say, well, are you offering today on your platform emission data? As we know, the new regulation is China now obliges all listed companies to list their or to disclose their climate risks. Can I go in and buy emissions data on different assets through the MioTech platform?
Absolutely. I think when we talk about climate risk, there are really two different aspects. One aspect is about whether the company itself is being influenced by or being impacted by climate risk. That part, we have built a lot of physical risk assessment tools, industry risk assessment tools from a high level, from the macroeconomic level or macro ESG level. And on the other hand, as you have correctly pointed out, for example, the Hong Kong Exchange has mandated, they have revised their guideline on reporting and has mandated that all companies reporting need to report more and more quantitative data on their greenhouse gas emissions, including various others kind of measures. So reporting is on one hand, we do collect data. We have very robust NLP algorithms built on top of our PDF extraction technology to extract the data that are relevant. But on the other hand, just to share with you as an anecdote so that we know where the industry is trending, we're also collaborating with Chinese regulators, especially the Environmental Bureau and the Industry Innovation Bureau, to actively monitor a lot of the companies that are under their administration or being governed by them. So that we're actually working on installing IoT devices, for example, so that we can verify the information on their greenhouse gas emissions. Because one of the problems in ESG is that data, even though being reported, are not being audited or being verified.
Thank you, Jason. That was very, very helpful clarification. And for you, Alexandra, could you build on this, also explaining us how the data sets you explained, how you help to really link them to leading standards such as SASB, UNGC principles, ESG, but also the TCFD and TNFD upcoming frameworks? Oh, we cannot hear you, Alexandra.
Now?
Yeah.
Okay, I don't know. was green the whole time. So yes, I think, thank you for the question. So when we look at our research scope, it currently has 95 ESG issues and topics, everything from human rights to Arctic drilling to palm oil and everything in between. And what we do when we implement these frameworks is basically give our clients the ability to see our data through the lens of one of the leading sustainability frameworks that they need for their day-to-day business. So for example, with SASB, we mapped our data, our 95 factors to the GICS of SASB, and then and when we needed to go a level deeper to the metrics and the more detailed information, we did that, and then we deliver that mapping to the client. But essentially those frameworks are then available through our data set so that our clients can see SASB, the Sustainable Development Goals, and the UNGC all together in one platform using the technology that we're able to leverage. And because sustainability and ESG is a moving goalpost, every time you think you have the next framework in place, whether you're a data provider or an asset manager or a bank, the next framework has come up. So now it's all about the TCFD and the EU taxonomy. So we're doing some work around that, always through this framework of risk that we have, and always through this framework of looking outside of a company. So not looking at a company's own disclosures and reporting, but looking at external data sources to deliver that data.
Thanks a lot. And that leads me to the next question, because that was a lot about linking data and converting it into useful, investment ready, and linked to standards and frameworks. And we have a question coming, which is along the same lines for you, Xavier, from Lisa Bauer. And she asked, what is the synergy between the decisions taken based on ESG factors that you get from rep risk and other risk factors, e.g. crime and credit risk?
Okay. Well, actually, when we make an investment decision, it's really the combination of various inputs coming from various areas. And the point is, again, to make informed investment decision and really to maximize risk-adjusted returns over the long run. And if you want to achieve this, you really need to have a sort of holistic understanding of what the company is doing. You will first start by looking at the financial statements of the company in its annual report. You will stack up on top of that elements coming from the environmental report, let's say. You will be willing to understand what is the company's carbon footprint, what its carbon intensity, and so on and so forth. But it's not sufficient, because if you want to have a clear understanding of the underlying risks and opportunities, you need also to have a look at what the company is sometimes hiding under the carpet. And we need people to look at what's under the carpet, and typically people like rep risk can help us from that perspective. Because usually companies disclose certain types of things, and obviously the way they will disclose things will be subjective. That's normal, that's fair. They will be willing to look nice, to look good, etc., and they will showcase their magnificent policy, glossy brochure, magnificent websites, etc., etc. But people like us need to scratch the surface if we want to take the right decision. And of course, having a clear understanding of what's being said in the media is the starting point. And this is why we are quite happy to have people like Reprise, because as Alexandra mentioned, what they are doing, they are defining a set of issues, and then they are assessing on a daily basis to which extent the company is hitting those issues, to which extent it's involved in such controversies. And then it will be the role of equity analysts and credit analysts to include this into the investment thinking, into the investment modeling, into the valuation exercise, which is a prequel to each and every single investment decision. But as many of the other panelists have mentioned, we need to go even further. And again, we go back to the legislation. And if you look, for instance, at biodiversity, as I said already, assessing biodiversity is very difficult, because it's really about, if you want to translate this into quantitative metrics, and this is something we need to go through anyway, if you want to integrate it into our investment thinking, what you will have to do, you will have to measure something called mean species abundance, which is the core metrics which has been defined by many think tanks such as Cambridge or Caisse des Dépôts here in Paris, which are, in my views, probably the two most advanced think tanks regarding this biodiversity theme. But the issue is, how on earth are you going to measure that? Because if you want to measure the kind of pressure a company is having on its environment, you will have to make sure to have a clear understanding of what are its actual activities. What's the turnover? To which extent are they important? And where are they located? And what is the nature of these activities? Because typically, if a company builds a road, this has a certain impact on biodiversity. If it has a factory, it has another kind of impact on biodiversity. But if it's, let's say, a nuclear power plant, this will have, let's say, a certain impact. But if it's a coal-fired thermal power plant, you can easily imagine that the impact will be different. So AI will prove certainly helpful in gathering all the bits and pieces, enabling us to have a clear understanding of what is this actual pressure. And it's fair to say that it's really a learning by doing exercise. And it's really very much a learning by doing exercise for basically everybody. And from that perspective, I think that artificial intelligence is very helpful, because this is really about building algorithm, and this is really about machine learning. You need to teach your machine to look for which kind of information you actually need. And this can be a pretty labor-intensive and pretty lengthy process. But I think this is why when we consider artificial intelligence, we are not saying, I'm just buying this or I'm just buying that. I think it's fair to say that we would need really to have a clear partnership in order to really define the data which are really helpful ultimately for our clients. And it's not, let's say, another shared solution that we are looking for, but it's really a kind of investment thinking which we share with the partners in order really to develop a framework that suits our needs.
Thank you very much, Xavier. That was very helpful, and working in partnerships between agencies, but also humans and technology. We have now a last question that we have time for before we have to go into the final remarks. And it's a question from one of our audiences, which is there any monetized data on any of the ESG reporting, e.g. penalty fee if a firm violates legal requirements? Would you like to offer some reflections, Daphne, on that question?
Sure. So one of our main products, as I said, is our cryptocurrency Palafita. And it can give an unmeasurable impacts in the society. So it is applied in, first of all, in this community of Maré. So when you have blockchain, you can have a whole history of transactions. So something that we noticed when we first went to Maré is that usually people with low income are also the ones targeted for fraud and money laundering. And because of this cryptocurrency, we can avoid such thing happening. And at the same time, we can financially educate such population to have how to save money, how to open their account, and do it on a formalized way. So this is a service that we offer as well. And besides that, we have a lot of we monitor a lot of impacts, such as.
I have to keep it very brief, Daphne, then we can have a 1 minute roundup.
Okay. So one of the results that we can have is that since we started implementing Palafita, is that 65% of the population of Maré decreased the number of overdue accounts. So that plus the decrease in the transactional costs are some impacts that we measure. I hope I
Thank you so much. We've almost come to the end of this very exciting discussion, and I think sort of a discussion that will mature over the next few years. So I would like each of you, just for a few sentences, to share with you the answer to what, if you could share an important lesson that you have learned working with digital ESG data processes, can you share with the audience what is your advice to them if they're taking their first step into this journey or their next step on this journey? I'll start with you, Alexandra.
Yeah, Thank you. So I think one thing that I think I would encourage everyone to do is look under the hood. And let me explain what I mean by that. So there's a lot of data out there. We're all overwhelmed with data, and there's plenty of ESG data as well. And as we've discussed a lot on this panel, a lot of it's based on self-disclosures, and that's usually and mostly not enough if you want to get a comprehensive view of a company. But there's a lot of pressure when it comes to ESG. There's this moving goalpost that I mentioned. There's always new expectations on banks, on asset managers, on other players in the market. And as the pressure increases and as the expectations and the standards increase, it's important that they look under the hood with the data that they're using. So understand the methodology, ask questions about how scores and metrics are built, see how transparent a particular provider is when it comes to explaining how they do the work that they do. So I think looking under the hood is really critical to making good decisions on the data you use so that you can make then good decisions in business.
Thank you so much, Alexandra. And the same question to you, Jason, your one advice?
I'll probably just use a quote from one of our clients to conclude. So during the session with one of the very large sovereign wealth funds, one sovereign wealth fund customer of ours, they said one thing that echoes in my mind for years. They said that ESG to us is anything other than financial statements. So basically, that tells you that the scope of ESG is really growing. That people are taking views at or taking a look at companies or entities or investment opportunities from all different angles. And that makes things really exciting because the way that we're evaluating companies and investment opportunities are eventually going to different angles and using different sets of data. Yeah.
Thanks a lot, Jason. And your advice, Xavier?
Well, I think for me, it's really a no-brainer. You need to have really a multi-dimensional vision of the companies you are investing in, simply because from different angles, you will get different perspective, and you really need to have this holistic understanding of what we are doing. And from that perspective, I think that AI is definitely the thing we need. It's not the solution because, as I said, it's not an off-the-shelf product that you can purchase from your department store and really implement and plug to your investment process. You have really to think it through. You have really to develop something that suits your needs. And the beauty of that is the flexibility, because I'm pretty sure that going forward, there will be ever more new legislation, new data to look at. And I think that something I hadn't implemented so far is actually the geospatial dimension of ESG. And again, this is something I should consider because this can apply to UNESCO heritage websites. This can apply to Ramsar wetlands, for instance. And this is definitely something which is really of importance for us.
Thank you so much. And Daphne, the last word is yours.
So to keep it short, I would just say that data is really powerful tool, but it needs to be followed by human experience and human resources as well.